Hey all, welcome to Share Trek. This is Raj here. And friends, today in my video, I'm going to talk about the indices and where the market is going, because we have had some decent news from the inflation front, and typically the stock market should have jumped a lot by that, but it has not happened. And also some of our genomic shares, which had been on a tear, have started going a little negative. So I was thinking of analyzing everything and coming up with some conclusions. I've done that, and I would like to share that with you, and I'd like to hear from you what your thoughts are and whether you agree with my assessment. So that's what we are going to do today. So let's get started. Welcome back, friends. In a recent interview, Jamie Dimon, the CEO of JP Morgan Chase, expressed concerns about the potential panic and catastrophic consequences that could arise if the United States were to default on its sovereign debt. Dimon's remarks join a chorus of business leaders and government officials who are sounding the alarm about the urgent need to address the US debt limit. The threat of panic and catastrophe expressed by Jamie Dimon is that an actual default on the US sovereign debt would be potentially catastrophic for the country. He predicted that as the United States approaches the possibility of default, panic would grip the markets, leading to stock market volatility and upheaval in the treasuries. Dimon's concerns align with Treasury Secretary Janet Yellen's assertion that a default should be unthinkable and would result in economic disaster. The prospect of panic-induced reactions could have far-reaching effects not only on the domestic market but also on global markets, because many countries put their money in the US dollar bond market, treasury bills, and there is a lot of international trade happening through US dollars, and if US dollar value was to fluctuate, then that could cause a whole lot of problems in clearing houses and other places, and there would be a lot of losses for people. So it's a more of a global phenomenon as well. What happens in US with the debt ceiling is not just going to impact US, but the whole globe, because US is the reserve currency. And preparation and risk mitigation is a major aspect that most banks will have to take. And Dimon revealed that JP Morgan has been actively preparing for the risk of an American default. The bank has established a war room that convenes regularly to address the potential implications of a default. And Dimon emphasized that an American default could impact contracts, collateral, clearing houses, and clients around the world. The seriousness of these preparations indicates the magnitude of the potential fallout and the need for urgent resolution. Now, friends, if we were to talk about having a war room, it's a kind of unstructured approach, but I can't think of any better way to handle the current unfolding circumstances, because we don't know what is going to happen when. And right now, the US House, it's not clear whether it's going to consider it as an important prerogative to make sure that the debt ceiling doesn't become a football and a suspense for the world. And we had Trump in the recent CNN town hall saying that the GOP should hold the government to negotiations and get a lot of cuts before allowing for debt ceiling increase, and if required, it should default. So the tea leaves are not looking good if we were to take all those statements at their face value. And calls for compromise and negotiation is happening in various places, including from Jamie Dimon, who made a direct plea to politicians of both major US parties, urging them to negotiate a deal and avert a disastrous outcome. His exhortations highlight the critical role the political compromise plays in mitigating the risks associated with the debt limit. Dimon's plea underscores the importance of setting aside partisan differences and finding a solution that ensures the stability and integrity of the US economy. There is also concern that the regional banking players might also end up in default. In addition to discussions of debt default issue, Dimon also stressed concerns about regional banks. He revealed that he engages daily in conversations with regional bank executives, citing worries stemming from the collapse of SVB in March. And Dimon acknowledged that while regional banks remain strong and are likely to achieve positive financial results, the recent bank runs that affected three firms have raised concerns. He cautioned that the regional bank crisis may have further implications in the future. But friends, these are all the regular sound bites that you see from establishment. And I would like to share with you how I look at this whole thing. I sense a growing sense of disappointment as the United States continues to fail to raise the debt ceiling, jeopardizing the stability of the economy. The consequences of their inaction will reverberate across international trade and have a profound impact on the value of the US dollar, both as a trading currency and as a reserve currency. The following is a list of potential repercussions in my mind. Disrupted international trade. The uncertainty surrounding the US debt ceiling can undermine global trade by eroding investor confidence and increasing market volatility. Businesses reliant on a stable trade relationship with the US may hesitate to engage in long-term contracts or investments, leading to a slowdown in cross-border transactions and investment flows. And friends, this is exactly what we don't want when we are staring down at a potential recession or the so-called soft landing or hard landing. So we don't want that. And another aspect I would like to add out here when we talk about clearinghouses and all that is that most countries have a Nostro account and they settle their trades in US dollars. And if the value of the US dollar is going to go down and fluctuate, then whatever they have sold, it will be worth less when they actually get the money. So as it is, US dollar is facing a lot of challenge from other players who are trying to set up alternatives to US as a reserve currency. Mainly because of the fact that US has sanctioned a whole lot of people and entities and seized a lot of property, and people are looking for alternatives. That's where the Bitcoin and Ethereum and the whole crypto craze came from. And it's at this point of time, China is trying its best. US dollar is facing some challenge through European currency, EU, ECB's EU. That's finding its place in some reserves. The British pound sterling used to find a place in reserves, but they have their own woes. So the dollar being what it is, many countries are going to feel the pinch of it if the value of dollar falls. And the value of dollar is but a promise. It's not backed by gold. And if the House constantly plays around with this debt ceiling every 3 years or 4 years and have this drama, then I think the world is going to get tired of it and they would look for alternatives, and they may even find an alternative. They'll settle for something which is slightly less painful but more reliable. So that's my feeling. And the diminished US dollar value makes the US dollar status in the world's primary reserve currency a bit weaker. International investors and central banks may diversify their reserves holdings by reducing the exposure to the US dollar. This shift could lead to a depreciation of the dollar, making imports more expensive for America, and therefore the US will start importing inflation from other places. And consumers and potentially everybody in the industry will also have reduced purchasing power, and that can affect the US economy. So when US industry decides to import stuff, right now the inflation in US is controlled because of cheap imports from China. But if the US dollar becomes weak, then the same imports will become more expensive, and then the interest rate already high in the US cannot be raised further in order to control that inflation. Then we look at market volatility and risk aversion. Uncertainty surrounding the US debt ceiling has the potential to trigger market volatility and risk aversion. Investors, both domestic and international, may seek safer havens for their capital, diverting funds away from the US market. This flight of capital could exert downward pressure on US stock markets, destabilize financial institutions, and impede the economic growth. So apart from this, you also have the question of increased borrowing costs, because failure to raise the debt ceiling may result in a downgrade of US credit rating. This downgrade could raise borrowing costs for the US government, and as it becomes riskier for investors to lend money to the country, the increased cost of borrowing would further strain the government's finances and hinder its ability to invest in critical areas such as infrastructure and social programs. And then we have weakened global financial system, because the US dollar's pivotal role in the global finance means that any turmoil in US economy has ripple effects worldwide. A faltering US economy coupled with a weakening dollar could undermine global financial stability, leading to market disruptions, currency fluctuations, and potential financial crisis in other countries. In conclusion, I would say that In conclusion, the failure to raise the US debt ceiling not only instills disappointment, but also carries severe implications for international trade and the value of US dollar. The resulting market volatility, diminished confidence, and potential downgrading of the US credit rating would not only impact the US economy, but also reverberate throughout the global financial system. Urgent action and political compromise are imperative to avert the potentially detrimental consequences and safeguard the stability of both domestic and international economies. Friends, that means that our share prices are going to suffer if there's a default, and there will be money fleeing the US economy, and the Fed will not be able to raise interest rate further in order to make the US dollar more attractive. So that's what we are looking at. So call up your representatives and ask them to come to a compromise and remove this debt ceiling drama. That's what I would insist from out here in Toronto. With that said, friends, I'd like to bring this video to an end, and I'll catch up with you with the next video. Bye for now.